Mortgage rates hit a 10-month low recently. It's been all over social, it's been all over the headlines, but I'm here to tell you it might not matter. It's probably not that big of a deal to you. $20,000 in buying power should not be a reason for you to make a determination whether it is time for you to buy a home, move up, or anything in between. We're going to talk about that. We're going to unpack it all. We're going to make sure that you, as the consumer, understands exactly what you should be doing based on your unique situation in your unique strategy. If you don't know, I'm Jeremy Kane with eXp Realty living in the Denver suburbs. I help people just like you make these determinations, build wealth through real estate, as I have been able to do in my life. Buying my first home at 19, rentals, and all the things. I love helping my clients determine what really matters when the time's right for their unique situation. I'm a real estate agent. I'm gonna sit here and tell you that absolutely, the interest rates going down a little bit, still very high from what it was 3-4 years ago, but nonetheless, newsworthy note. But if $20,000 in buying power over a 30-year loan is the difference on if you can afford to buy a home or not, it's likely probably not the right time for you to buy a house. And so rates are lower, but should you buy, right? Let's talk about this. The current market trend is rates are dropping a little bit. We do see, as a result of the poor jobs report that came out last week, the mortgage rates did drop a little bit. And so people are drawn to this. And if we're sitting on the sidelines waiting for mortgage rates to drop and, dropping, I don't know what it was, 1/4 of a point, maybe a little bit less in rate with a $20,000 additional buying power, according to a Redfin article that I read yesterday, does this really make it time for you to purchase a home? Maybe $100 a month, right? If you are that tight and all of a sudden you're like, oh, now I can afford it. The truth is that you've had that power to negotiate for the last 3 or 4 months. So why now, because the mortgage rates are just dropping a tick, are we all of a sudden time to go? So let's talk about this. Let's step back and understand what it looks like when you purchase a home. There's always increased, insurance and taxes over the time. We do say that, locking in your interest rate, 30-year payment, but taxes and insurance typically are going to go up, especially in our current climate. So your payment is going to tick up a little bit. Yes, what the byproduct of that is as a renter is that's going to come to you. And I totally get that. And real estate is still the best tool to build wealth. It's just really frustrating to me when I see colleagues and lenders and, the rates are lowest in 10 months. Everybody should be buying right now. Truth is, everybody should have been buying before because we had that negotiation power to get yourself $20,000 in negotiating, whether that's for a buy down or whatever. But we have to understand that just because the rate went down, we can't flood the market. We don't want to do that because our unique situation is what matters most. So let's kind of talk about that. If you are unsure about your, how you should react to this or your readiness, let's have a conversation. I help buyers just like you make plans, and I promise I will not tell every single one of you that yes, now is the best time. But reach out below, my phone number, you can reach out, we can have a conversation about your unique situation, and it may be a great time to buy depending on your life, situation and what's going on, or it might not be. But if it's not, we can make a plan to, get you ready for when that time does come. So who should wait to buy a house? The old adage that buying is cheaper than renting over the long haul, over the wealth journey, absolutely. Right now, maybe not, right? Rents are, a fair amount lower than, what the average mortgage payment is for now. Not saying that's gonna last. Rents are not guaranteed. However, a rental agreement and a lease agreement is a year commitment versus a 30-year commitment. And that's something we can't ignore, right? You understand what you're gonna have to pay every month. In Colorado especially, tenants have a ton of rights over landlords, unfortunately. So, you do have options there. And I'm not here to say that renting is better than buying, but it may be cheaper. And if you are not going to be in a specific situation, for the next 2 to 5 years, we don't know what's going to happen with the market. I have friends that are saying it's, could be a crash. We are in a tough financial spot as consumers. And so we have to take all of that into account so that we actually make the right decisions as we move forward. And so absolutely, if you're starting a new career, you don't know where your career could take you. It could take you on a relocation journey, and maybe being a landlord isn't in your future. Now, if you're starting your career and you want to get into a house, certainly grab a house, right? Make sure that, it's in a high desired area. Make sure that you are getting the best possible deal using the, seller's willingness to negotiate. And let's get you the lowest possible long-term interest rate, because if something does come up, you want to stack rentals anyways, you can turn that into a rental, right? Especially when you're relocating. Sometimes jobs take you to, a place and you're like, okay, yeah, this is going to be awesome. Turns out you don't love living there. You can't be away from home, whatever it is, and you want to come back. Well, if you have that specific piece of real estate that's, being paid for by someone else and gaining appreciation, and you have the ability to come back to that, certainly give it a shot. Why not? However, if you're not into that, you don't want to build wealth through real estate, maybe, that uncertainty in the job area is not where you want to jump into a 30-year commitment. If you are thinking about moving, you might want to live somewhere else. You have that itch to kind of go explore and, travel and do all of those things. Maybe buying a house in Denver is not the best idea for you. The point is that if we have to turn this house around in a year or two, it's likely going to be a really turbulent couple of years in the real estate market. So if you put all your life savings into that as a down payment so you can control that monthly payment, and then you have to get that out or pull that out, and you don't have the, appreciation gain as it, looks to be a little more flat than it usually has been over the next couple of years, then what, right? We have to understand that when we're making these commitments, it needs to be a long-term commitment. You need to have a backup plan. If you do not have a backup plan and, you want to travel and do that, great. Right? Not every rate drop means that you need to, jump into the market. And so just by this ticking down a little bit, let's look at your lifestyle. Let's look at what you want to do. Let's look at your goals and make the appropriate decision. Because if you want to travel, if you want to get out of Colorado, if you want to do these things, look more long-term. Maybe you're, dating somebody that, would like to move back home when you start a family and those things. Maybe buying a house in that uncertain time is something that, could make or break, right? What I'm saying is I'm not promising you that you'll be able to put your house on the market. It's going to be, 20% higher than it was when you bought it last year. It's just not happening in this market. And we got kind of used to that in COVID, where we had more room for error, right? We could test a house out, we could buy it, we could get out from under it, we could pay the fees, and we could move on to the next place. That's not the climate we're in right now. So I just want to caution you all about that. So make that 2 to 5 year commitment, or at the very least have the opportunity to, turn that around as a rental and, have the passion to serve and build that, income stream as you go. I love that. I'm not going to tell you don't buy a house, but I am going to tell you if you do buy a house and, something were to change, have a backup plan, make sure it's a rentable commodity, and make sure that you're good to go. So let's talk about the real impact of this slight dip in interest rates. Like I mentioned, about $20,000 in buying power, nothing absolutely, off the chains here that we need to worry about. So, and let's talk about this. If $100, difference in your payment over 30 years all of a sudden makes you able to afford a home, we probably need to talk about what homes do. Homes break, right? We need to have, emergency fund. We need to understand that, heaters and air conditioners and, windows and all the things, they break, right? So this small drop in an interest rate should not grab your attention all of a sudden and be like, oh, I can afford a home. If $100 a month is the determining factor on this, then we need to have a real conversation. as well, $20,000 in buying power doesn't change a whole lot. You're going to be looking at the same houses in the same neighborhoods, maybe with an update here or there, an extra garage space or whatever. And so if you were that rate sensitive and you were that, tight on your budget, we need to be shopping the last 3 months and probably right now. Because if you do want to buy a house, you're committed to the 2 to 5 year plan, you're committed to all of that hanging tough, you've had the ability to negotiate this, and you still do. In that case, the rate drop does help a little bit, but don't give up on the negotiation. Don't try and not buy the rate down to lower and lower as you can, because with 14,000 active homes on the market, which is an amazing number compared to the 3,000, 4,000 numbers we saw during, COVID and the crazy years. Understand you have options in the Denver and Northern Colorado markets right now. And if those options involve, the negotiating power of dropping the rate further, you've already had this ability. You've already had this ability to save $100 a month on a payment. And now, just because the rates dipped a little bit because of job report or whatever, this is my point. I don't think we need to be rushing in and out of anything because of the fact that we do need to make sure that real estate is a long-term investment. It needs to be a long-term thought out plan, because otherwise we're just day trading real estate, and that's when people get in trouble. We don't have that luxury based on our current market and based on the projections of what's going on. And just remember, all Americans are in a tight spot financially, right? Everything's expensive, and that means when you move into a home, it's more expensive. It's more expensive to move. It's more expensive to furnish. It's more expensive for the energy, and all of that comes into play as we look at, record high prices and higher interest rates than we've been used to over time. And so this is why this matters. The very worst conversation I can have with you is, hey, you bought this house, and if you sell it, you're going to actually bring money to the table as a seller. Makes absolutely no sense. It doesn't mean it has to happen. There are life circumstances that I know are going on: death, divorce, relocation, forced relocation, job loss, those things that we need to, be aware of and sensitive to. However, if you are making this commitment, make sure it's at least a 5 to 10 year commitment. And if things go great. And if they go poorly, as I always say on this channel, hold on and make sure you're doing what you need to do. So as we go, the next piece is we need to be strategic, right? If we're reactive, we need to understand, okay, I'm a first-time home buyer, the rates dropped, I'm ready to get in. Well, if we're doing that right now, what's going to happen? We're going to look at, these condos and townhomes and those first-time home buyer kind of, draws. It has the amenities. You don't have to take care of the lawn, all of that. But those HOAs are riddled with this insurance problem. The more buildings in the complex and all of that, this is less control than you actually think you have, or you have in a detached home, because you can't, determine what the master insurance policy does at your, 100 unit complex. And so there is an uncertainty with HOAs and insurance for you. And what that does, that's a very good entry level, whether it's first time home buyer, you're downsizing, whatever. This is a very good lower priced opportunity that maybe isn't even at all cheaper than buying a detached home outside of an HOA. You have to have that control. And also when you think about it, you're like, okay, yeah, I'm open to renting. This is great. The amenities are great and all of that. But again, you don't control that. And a lot of times the HOA fee going up, eats up your entire cash flow on a good rental investment. So make sure we're understanding about that. Make sure we're being strategic and we're not reacting. Oh, yep, the interest rates get down. I gotta get into something. Oh, this is a nice townhome. It has a garage. It's newer. It's great. It's got a swimming pool. Well, all of those things kind of add up, and you better be very careful in those HOAs that you're making those determinations. What do the budgets look like? What do the financials look like? And ultimately, what does the insurance policy look like? Because especially in Colorado, hail and sometimes fire come into play, and those insurance rates are through the roof. So If buying a home is in your long-term vision, if you are dedicated to this spot, to doing it, yes, this rate drop does bring, hope that maybe it'll continue to drop and, the affordability will continue to play in your favor. However, it does not mean that it's an absolute must that you get into the market right away and you react to this. Because honestly, by the time you get in, you get approved and so on, the market usually bounces back a little bit, reacts. And if we are stable, it's better for us than not, because as my good friend Jimmy Everett's always has said, he used to go 6 weeks without talking about interest rates or answering an interest rate question. Now he barely goes 6 minutes because information is traveling so quickly that sometimes we take that information, we get locked in. By the time we, get under contract and we go to lock in the loan, the rate's gone up and all of a sudden we're here. So this is why the rates changing does not significantly impact or should not significantly impact your home buying decisions, because we have to come with a plan. We have to be better, and we have to be better prepared to make the right decisions and make sure that this real estate endeavor is a long-term process, a long-term commitment. Because again, if it is that long-term commitment, you can commit to that, you're stable in your job, that there's upside and career movement there, that you want to be here, family, whatever roots down here, you're not going to be transferred out to the Midwest at drop of a hat, then we have the opportunity to make these investments, take advantage of the higher inventory, take advantage of the buyer leaning market, in my opinion, and get into something. However, don't wait for the rates to hit 6 or 5 or whatever you're looking for, because right now, sellers with 14,000 active homes on the market, 10,000 more than we've been used to over the last, 2 to 3 years ago, you have options and you have control as a buyer to find the deal that works for you for your long-term plan, and not just react to a small rate drop and jump in the market. So I hope this helps. As always, reach out to me. I'm always here to help you determine that right time, talk about your unique situation, and I promise more than anything to not push you into something that doesn't make sense, because overall, your long-term relationship with me is more important than, getting the sale right now. Because I know the power of real estate. I know the power of investing in real estate, and I want to make that same wealth building journey come true for you as it did for me. So reach out anytime, DM me, comment below, and we'll chat soon. See you next time.